Good afternoon, Facebook world. John King with Summit Funding. It is just about 1 o'clock on Thursday, the 27th. So Merry Christmas to everybody. Hope you all had a fantastic Christmas holiday. Hope everybody has some great plans to stay safe and have fun for New Year's Eve next week. I am in the office today working and wanted to send out this update about what happened last week with the federal government shutting down and how that's impacting mortgages. I know there's a lot of questions out there. There's some misinformation. There's some information that just isn't known yet. And I'll try and cover all of that and be pretty thorough while brief all at the same time. So if you have any questions, feel free to give me a holler, and I'm happy to help answer them. A lot of this has to do with the nuances of what type of loan you're doing. So again, I'll go very, very high level, but hopefully give you some very specific information that will help you to know what questions you should be asking of your lender or of me, or how to make things happen. So let's get started. First of all, let's talk about the departments that matter. So FHA, VA, USDA, Fannie Mae, and Freddie Mac. Those are the 5 departments that write the rules for mortgages. And so we're going to talk about each one of them. We're also going to talk about the IRS. We're going to talk about Social Security. We're going to talk about the National Flood Insurance Program. And then finally, we're going to talk about federal employees themselves, because people who work for the federal government are being impacted by this, and getting a mortgage if you're a federal employee can also have some challenges based upon what's going on right now. So let's dive in and start talking about each of those 5 programs. So first and foremost, FHA has very, very little impact. The rules are written for all of these programs. Lenders know what the rules are, and so they don't need to contact people at FHA in order to do a normal FHA loan. The problem comes into play if you're in a situation where you're trying to get a condominium project approved through FHA. They've shut down that department. Or if you're doing a reverse mortgage, the new rule that started a couple of months ago says all reverse mortgages have to have the appraisal reviewed by FHA. That department is shut down. So anybody doing a reverse mortgage right now or wanting to do a reverse mortgage is completely on hold until the government comes back up and running. So those are the minor things, but those are the things that will impact you if you're doing an FHA loan, specifically buying a condo or doing a reverse mortgage. VA, no impact. VA ruled that they're going to keep all operations normal, essentially that home mortgages are considered critical, and therefore will continue to operate with no impact whatsoever. Fannie Mae and Freddie Mac, very, very little, almost no impact. Fannie Mae and Freddie Mac are quasi-government. They are overseen by the government, but they are not government agencies. So there's no impact to Fannie Mae's rules or doing a conventional loan, but there are some ancillary issues that I'll talk about in a minute that can cause problems if you're doing a conventional loan, specifically depending upon what lender that you're using. It has mostly to do with the IRS and Social Security. Okay, so USDA. USDA, huge impact. USDA has to approve their loans before we can actually draw docs and close them. That department for USDA is not operational. And so that department shut down. Technically, a lender could fund a loan and then cross their fingers and hope that USDA approves it. But the problem is that we've got major risk on the line, and most lenders are not doing that. I don't know of anybody who is funding a USDA loan without having USDA's conditional commitment. Also, if anything changes, if you had a commitment letter from USDA and they reviewed it, and then anything changes, $1 changes on your loan amount, USDA will have to reapprove it. Most lenders, including Summit Funding, will not fund that loan. Even if it's a minor change, we have to get the commitment updated. So huge impact on USDA. Now, those are the 5 major programs. Now we'll talk about some of the other things that are creating issues. Social Security. Anytime we do a mortgage, we validate your Social Security number to verify it belongs to you and it was the one that was issued by Social Security. For most people, there isn't an issue because there hasn't been a name change. And so if we get a copy of your Social Security card, which we will use right now in lieu of validating your Social Security, we're fine. But if there's been a name change, we might have a problem. You might not be able to close on your mortgage if we cannot prove through third-party documentation that your Social Security number belongs to you. So that can be a major issue regarding Social Security. The big one is the IRS. Huge impact from the IRS. 90% of the mortgages that are done, let me rephrase that, 100% of the mortgages that are done, we have you sign a form called a 4506T. That form allows us to contact the IRS and verify that the taxes you turned into them are the same as the ones you turned into us. In other words, we get a transcript of your filed tax returns to make sure that you didn't use any whiteout to change the numbers or give us a different version of the taxes than what you had turned into them. That's a fallout and requirement on all loans before we fund them because of all the issues that happened 10, 12 years ago with the funny business on loans. So this is absolutely required that we get tax transcripts on all loans before we close escrow. I said we have you sign that form 100% of the time. Most loans, we require them not because Fannie Mae or Freddie Mac or FHA or VA require it, but because the bank who is holding the loan is concerned about making sure there are no issues with the information on the transcript. Because later on, Fannie Mae or Freddie Mac can audit and make us buy back that loan. Summit Funding is one of very few lenders that are willing to fund loans without having a tax transcript in file. Now that the government is shut down, many other lenders are relaxing that policy as well, and they're funding loans without the tax transcript on file. But that's typically only applicable to your normal government-backed loans like FHA, VA, and Fannie Mae and Freddie Mac. Our big issues come on jumbo or non-conforming loans. These are loans that fit only in a little box based on what that investor is willing to accept. Jumbo loans are not backed by the federal government. There's no one set of rules. And so if we end up with a problem on one of those loans, there isn't somebody else to sell it to. There is no government to go pass it off to. So we are not funding loans on most jumbo loans without the investor specifically or the bank specifically saying it's okay. The problem is most of the banks and the bigwigs are shut down right now because of the holidays, not because of the government shutdown, because of the holidays. So for some of our investors, we found out, yes, they're willing to accept jumbo loans even without having the tax transcript on file. For some of them, they are not giving us answers because they don't have the right people actually working who can make that decision. So we're not going to know anything until next week. So it's creating major roadblocks right now in closing loans. The next thing that's going on, so IRS is a really, really big thing that can create major issues. The next one is a fluid situation, flood insurance. I say fluid and no pun intended, although, hey, flood, fluid, ha. The issue with flood insurance is that there are two ways to get flood insurance. You can get it through the National Flood Insurance Program, the NFIP, or you can get private flood insurance. Private flood insurance, no problem, everybody's issuing it. The National Flood Insurance Program had not been funded appropriately, and so they passed, it was supposed to be passed as part of the funding bill for the government to continue running. It was not included in that. Then over the weekend, Congress passed a bill that said, yes, we will allow for the flood insurance program to continue today, literally today, Thursday, the 27th. And FEMA said, nope, the government shut down. We're not going to let the National Flood Insurance Program continue. And we're not going to honor what Congress said over the weekend. So bottom line is that there are no policies being issued by the National Flood Insurance Program. Two problems with that. The first one is that often the NFIP can be cheaper than a private program. So therefore, you're sometimes requiring more expensive flood insurance. Second, and more important, if you're doing an FHA loan, FHA does not allow private flood insurance. FHA requires that if you're in a flood zone, you must use a policy from the NFIP. So we essentially have said any person with an FHA loan in a flood zone cannot close escrow because the NFIP is not up and running. Major issues for people who are using FHA to buy a property in a flood zone. Finally, I'm going to cover federal employees. So we've got two problems with federal employees. We've got the fact that, first of all, some of them are on furlough. Some of them are not working because the government is shut down. A lot of them are on furlough because the government is shut down. We cannot close a loan for somebody that is not actively employed, and we're not closing loans for people who are on furlough. So that's a first and foremost big problem for anybody who's caught up in this, that we're not able to close their loan because they're not actively working. Secondly, even if you are actively working, we always have to call within the last 10 days of closing your loan to verify your employment. The verification process may be hampered, if not completely blocked, by the fact that maybe you're working, but the person who works in the department to verify your employment is not working. And if I can't verify the employment, then it doesn't exist and we can't close the loan. So some pretty major impacts that are going on here. Again, all of this is relatively fluid as far as how it's going to impact you. Give me a call. I will tell you Summit Funding is perfectly sized. We're a direct lender. We're one of the larger lenders. Last time I checked, we're about 25th largest in the country. That makes us big enough that we can make our own decisions and back our own loans while not being so big that we don't care about doing the right thing for the client. So if you have any questions about any of this and how it impacts you, or if you're unfortunately stuck with another lender who's having problems funding your loan because of the government shutdown, give me a call. Some of these things I can overcome that other lenders cannot. Other lenders may not waive the tax transcripts and may say, no, we're not going to fund the loan. Other lenders will have a lot of issues that I don't have, or at least I can validate that the issue is true and there's no way around it. So if you have any questions about this or anything else, give me a holler. Again, hope you all had a very, very Merry Christmas. Have a Happy New Year, and we'll talk to you all soon. Bye-bye.